It's interesting to watch our strategy as fears about Fed tightening and more Fed tightening continue. On many days when the market's down, our strategies are up. Now, that is what tends to happen in the later stages of a bear market. Our strategy starts to outperform. Even it may just be that we're down less than the market. Some days we're up when the market's down. Why? Because during the later stages of a bear market, the new leadership shows up and starts performing. We're the new leadership. We always are. And many people think, oh, I've got myself covered with the NASDAQ 100. No, look deeply into those indices. We are the new NASDAQ. And most of our stocks are not in those indexes. We haven't owned the FANGs in our flagship for quite some time. That's not the new anymore. TikTok has come along and destroyed a lot of models. So yes, I think that we're seeing the early stages of a bottoming process. At the same time, many people are saying we're going into a recession. Now, we think we've been in a recession, and the negative numbers will reassert themselves after this positive third quarter, mostly because of the inventory overhang, and we need to clear that out. I think many forecasters may say, oh, this is going to last forever, this recession through. We think it's just a major inventory correction, and then we'll be on our way again. We believe it started at the beginning of this year. So if it ends in the middle of next year or the third quarter, it's not so short-lived. It's only short-lived given that many people in a midterm election year don't agree that we're in recession now. A lot of companies, and tech companies included, hired many more people than they should have, given what was going to ultimately happen to demand. And the first place you see a recession is in advertising, and the advertising budgets have been slashed. That's why, to me, hearing people say we're not in a recession and seeing advertising budgets cut in half by some companies is quite astonishing. And it's hitting the tech sector because so much of tech has become social media. But other technologies, I think, that help drive efficiencies, so more enterprise SaaS, they're probably going to do a lot better. We receive a lot of criticism for holding Zoom. Many people say, that's a COVID stock. Well, Zoom basically gave its service away for free to consumers and to education, which was the right thing to do for a crisis period. Now they're all cycling out, and enterprises are cycling in, I believe, 55% of their revenues. And they're adding new features and functionality. This is the first rip and replace cycle in the enterprise communications space, which is the largest part of the tech stack. So it's $1.5 trillion a year. First rip and replace cycle since the early 90s. The early 90s, Cisco helped build the backbone of the internet. All of that was on-prem, hardware-centric. Now all of that is going into the cloud, and it was stimulated by COVID. These enterprises finally said, okay, we have a reason to make the change now. Two winners, Microsoft and Zoom. So the Robinhood, along with Coinbase and Block, the three of them we think are in the running for dominating, potentially, the digital wallet space or becoming an important component of it. Robinhood is very user-friendly. And it is now moving into the crypto age, which is what it was missing. We've watched that very carefully. There is a company in Israel called Fireblocks, and we were very happy to learn that Robinhood basically ended its strategy of building internally its own crypto platform from an infrastructure point of view and hired Fireblocks. Robinhood's core competency is the user interface, the convenience, ease of use, and so forth. So it could become either the digital wallet, more likely it will become a part of a digital wallet ecosystem, either alone, standalone, or in partnership with someone, or as part of someone else. Elon Musk is our Renaissance man, or our Thomas Edison, perhaps. And if you go back and look at how many projects these innovators were working on, you'd be astonished. How did they do that? There are such people out there. Elon surrounds himself with great business people and engineers who want to work for him. He is solving the most challenging problems of the day, and they want to be a part of that under his leadership. And, remember, he started in the payments industry. So we could actually see Twitter. And now we just started a public-private crossover fund. Twitter is in that fund because we do believe that Twitter, Elon certainly believes in vertical integration. He has the payments experience. He and Jack Dorsey seem to get along very well and were talking quite a bit, as we learned from the documents that came out over the court cases. And so I think even Twitter could make a run at digital wallet, not just for financial services, but for commerce. So that's one. Do you remember Vine? My son, I thought he was going to make movies because he was on Vine constantly. That was a precursor to TikTok. And so there's some DNA within Twitter still, I believe, that could introduce something like that. You never know. And then one of my first experiences as an equity analyst was in newspapers. And believe it or not, they were rising stars of that day. And this subscription advertising model is a very smart move if he goes in that direction. The verification, that little check, is very important to people and could help clean up the platform considerably. And what we're trying to do is, and I know this is an overused word, but democratize venture capital. What is the question our clients ask more often than any other? Why is it that we don't get a shot, given how innovation-focused we are? This is the client speaking.